Hey guys, welcome back to the channel. Today we're going to discuss what moving averages are and how they work, and how moving average crossover works, and how you can, trade forex, crypto, and also binary options with these indicators. Okay, so I'm right now on the trading view chart. As you can see, it's the euro dollar pair, so it's the 1 minute, and I'm gonna first apply the moving average to show you what it is and how it works. Okay, we go here to the indicators, search for moving average. These indicators are, pre-made by TradingView, so you can choose each of them. I will choose the simple one first. So yeah, here it is. We have it applied to the chart, the blue line. So to edit the moving average and see the settings, you can click on it, double click on it. And as you can see, here's the length, the source, the offset, and a bunch of other stuff. But right now we're gonna focus on the length. So the length is 9 and the source is close. So what does this mean? The moving average calculates, it's an average that is based on the last closes of some candles. And when the period, the length is 9, it is calculated by averaging the last 9 candle closes, okay, on this time frame. Because here the time frame is set to chart. So I can also set it to each of these time frames. So for the purpose of the video, right now, we'll leave it on the chart. So right now, our moving average is calculating at each point in time. For example, let's say here. Here, our moving average is calculating this value that it's showing based on the last 9 candle closes and showing it here, okay? So it's based on the closes of the last 9 candles, not the opens, not the highs, not the lows, all right? So this is a basic moving average, the simple standard one. And there's one more variation that a lot of people use. It's called the exponential moving average, or the EMA. So I've added this one, and let me delete the SMA, the standard moving average, or the simple one. So the EMA is somehow smoother and it catches up much quicker with the price action, okay? So that's the reason many people prefer exponential moving averages. The formula is a bit different, but it's also, again, based on the last, for example, here 9 candles and on their closes. And of course, you can edit this one. It's not some fixed thing. You can make it, calculate based on the highs even. So let's see. Yeah. This one is based on the last 9 highs at each point. All right. And you can select the closes, and you can tweak with these. Feel free to do so. So I will leave them on the close option, and let's see what happens when you increase or decrease the length of a moving average. Okay, it's no different for the EMA or the SMA. So let's increase it to 20, and okay. So let's increase it to 200 and select OK. So this is a 200 moving average. We're in the 1 minute, so it's a 200 minute moving average, all right? So if I switch to the daily, this one, as it's based on the chart time frame, is a 200-day moving average, okay? So let's do something a little bit different. So for example, you imagine you prefer to trade on the 1 hour chart, and right now the period is set to 200, but you want your moving average to be based on a lower time frame, for example, the 1 minute, okay? So you will set this to, for example, you want the same 200 minute, or maybe try 60 minute, okay? And here you can set it to the 1 minute time frame, so it's not different when the chart, let's set it to 200 again, because 60 minutes is again 1 hour. As you can see, it really catches up to the price, so you can tweak with it and maybe set, for example, 600, okay? It's basically a 10-hour moving average right now that we have on the chart. You can see that there will be no difference if I set this to 1 hour and set this to 10. It will basically give the same, moving average, okay? But I prefer the 1 minute because it gets updated real quicker. So let's set it to this. And you can also use seconds, feel free, but I prefer to use the 1 minute. So yeah, this moving average is right now set on the based on the 1 minute time frame, but we're now viewing the 1 hour. Okay, so when we change it to 5 minutes, the moving average will remain the same. It will not change the period when you change the period of the chart, the time frame. Okay, so this is a really key point, as we'll get into it later in the video, because we're going to introduce some strategies and we're going to see how they work. But right now, you should really focus on the meaning of a moving average, how it works, and how it's basically shown on your chart and how we can edit it. Okay, so now that you know what an EMA and what an SMA is, let's try something different. I will search for a cross. Here, as you can see, there's an MA cross option. I will apply it to the chart, and of course I will delete the last one. So what is the MA cross? The MA cross indicator on TradingView, and I'm sure it's available on a lot of trading platforms, Forex and binary options, both of them. So it works like this. It consists of two different indicators, two different moving averages with two different lengths, the short one and the long one. Okay, and you can set each of them to the period that you like, and you can once again set the time frame. So let's set it to 1 minute again. And let's set the short MA length to maybe 20 and the long one to 60. Okay. All right. So the long one, let me check once again. Yeah, the long one is the green one. I'd like to change it to orange. And the short one, I'd like to change it to blue. And let's make both thicker so it's much more visible. And this cross option shows a plus, a blue plus. I think maybe I can change it. Yeah, a blue or red or whatever color you like. And it shows basically the crossing point on the chart. So you can leave this on. I don't like this, so I can, see it with my own eyes. So why should I bother and overcomplicate things? Okay. So now, the shorter period moving average, which is the blue one here, has a period of 20, and it sets on the 1 minute time frame. Remember, we're currently seeing the 5 minute time frame, okay? But the shorter moving average is based on a 20 period and the 1 minute time frame. So it basically calculates with 20 1 minute candles, and the long one, calculates the formula with 60 1 minute candles. Okay, so how do people use the crossover, and how do people use the basic moving averages or the exponential ones? Let's start with the crossover because it's a little bit more important and it gives actually more insights to you. Okay, so as you can see, our chart now contains two moving averages. The longer one is basically used for indicating the overall trend of the market. As you can see, it has more offset from the price, and it's a little bit smoother. There are not a lot of oscillations, but the blue one follows the price tighter, and it basically is the one which is more choppy, the shorter one, the shorter period moving average. Okay, and how many traders use the MA cross is that they wait basically for a crossover to occur. And by crossover, I mean the short one, which is, for example, lower than the longer one. When it's below it, it can move higher than it, move above it, and that is a bullish crossover. And on the other hand, when the shorter one is above the longer one, if it crosses below it and drops below it, it'll be called a bearish moving average crossover. Okay, so for example, a trader that trades this strategy alone will execute their trades based on these crossovers. And right here we have a bearish crossover. As you can see, the shorter period moving average has dropped below the longer period, the orange one. So traders basically can enter here. For example, it's on this candle that the crossover has occurred. So they can, you can enter on the open of the next candle and put your stop loss near or above the recent high. Okay, you can give it some breathing room if you'd like, and they will write this wave, this price move, until the next crossover. So where's the next crossover, the bullish one? It's right here. So they will be in the trade until up to here. So the move that they capture is this big, because at the close of this candle, the cross occurs. So they will exit, or you can exit right here if you like to trade based on this strategy. Okay, so here's how the moving average and bearish crossover works for traders that solely rely on moving averages for trading. And let's also show a bullish one. For example, right here, we have a valid bullish crossover. So the entry point will be here. You can put the stop loss below this low, this low, this low, whatever you like. I will put it below this one, but give it some breathing room. And we can follow the tide and follow this move until the next bearish crossover, which is right here. So on the close of this candle. So this is the move that you can capture on this instance. But you might ask, there are a lot of crossovers that happen. And this is really true when the market is consolidating and it's moving range bound. So which should we trust and which should we don't? Well, I should tell you right away that there's no unique formula for this. Some traders use moving averages with other tools to validate the crossovers. For example, the RSI, the MACD, or maybe they use support and resistance lines, or maybe they use newer methods like smart money concepts, ICT concepts. You can use whatever you'd like. It's out of the scope of this video, but it's basically a trend indicator. Okay, so these crossovers tell you the trend shifts, and sometimes they're wrong. For example, right here we have a bearish crossover, and basically there's one bearish candle after that before the next crossover, which is a bullish one. So there's not a good trade setup right here. So what I'd like to do is that I would add one more dimension to this chart, and it's the time factor. Okay, so what is the time factor? I mean, it's the trading sessions. I basically, when trading Forex, I basically rely on New York and London sessions. So these two boxes that you can witness here are the sessions, and there are specific hours that I like to trade, and they are basically the beginning of each session that I like to execute trades, and the overlap. Okay, the overlap is really my favorite area. Right now, you should say that the overlap is the price is choppy on the overlap, yes, but most of the time, at the end of the overlap, there's a good signal that you can execute. And of course, when I trade MA crosses, my exit strategies are a little bit different. I won't exit the trade when I have all the confluences. I don't exit it when there's another crossover, because some crossovers like this one are fake and they're really temporary. There's only a matter of time before these crossovers are invalidated with another crossover that validates the direction of the trade I'm in. So what do I do instead? For example, the strategy that I mostly use is to set my targets. For example, when I'm entering the trade in the overlap of the London and New York session, I will set my exit point at a nearby low when I'm, of course, selling. Okay, and for the stop loss, we can use the recent high or low. As you can see, this is not a high risk-reward ratio trade, but it's a win. So you should get used to, if you want to become a professional trader, let me get this out of the way real quick. I think it's better, in my own experience, it's better to stick to high probability trades. I mean, those strategies, those setups that have a high win rate, instead of sticking to the ones that have high risk-reward ratios but occur not that often. So for example, I'd like a strategy with for instance 2 risk-reward average, okay, and above 50% or 60% strike rate or win rate. This is a lot better. It's profitable, of course, but it's also a lot better when it comes to managing your emotions. Okay, so because getting stopped out 3, 4, 5 times in a row, that happens a lot of time with these high risk reward 1 to 20, 1 to 10 trading setups, will not be good for your psychology, because it will force your hand and it will make you emotional, and you will make terrible decisions. Okay, so we want our win rate to be high and our losing streaks um, you know to not happen really often and be shorter, much shorter than the ones who that happen with high RR ratio setups. Okay, so yeah, this is a one risk reward ratio, and as you can see, we've used only the moving average crossover for the entry and some basic price action concepts for the stop loss and the take profit. All right, this is the today's London session. It's actually on the 4th of February. It's in the past, but let's see how the price moves. The price is currently bullish, and you can easily see that on the chart, or even by using the moving averages. The shorter one has been trending above the higher one for a long time, and also the price is above both of them. So right now I'm waiting for the price to show me a reversal signal. Okay, so a bearish crossover signal. And also the price is nearby this recent high, so we can consider it as a resistant level, or you can consider it as a liquidity for the price to grab if you rely on liquidity based concepts. And I like the second approach better, so I would like the price to pierce through this level and then drop and give me a bearish crossover during this drop. Okay, so that will be my entry setup, and let's see if this happens. Okay, so as you can see, we have a bearish crossover right here, but this liquidity above here is still intact. I'm not going to enter the trade right here and enter a short, because it will be against my rules, and you guys should always stick to your rules and trading plan, so no questions asked. So let's move on and see what happens. Okay, the London session is basically at its end, and we have the beginning of the New York session, the 8 a.m. of NY time. So this is the overlap I was talking about. Now I'm going to I'm going to wait for another setup. And this time now, I can also go for long, because we have some liquidity here that should be haunted, in my opinion, because this trend has been bullish. And we have, good momentum moving toward this high. So I believe the price is likely to pierce through it. Okay, so let's see if we get that bullish crossover. All right, here it is. We got the bullish crossover here, and the price has already pierced through this liquidity. So now you can do two things. You can either chase the price, you can enter here, but for the market to reach these liquidities right here, it should move a lot. Okay, so I prefer not to do that. I will instead wait for my reversal signal, because right now this liquidity has been hunted, and we can wait. All right, guys, we have it here. We have the bearish cross. As you can see, the momentum that the crossover has occurred is not high. Okay, and why is that? Because the New York session is already over. All right, so this is a basic example of tape reading when you don't have anything to do. You should stick to the chart. You should watch how the price acts, but you don't have to force a trade. I didn't have a setup right here, so I didn't force the trade. All right, so here's another trading day, and as you can see, the London session has just begun. We're on the 5-minute time frame, but our MAs are based on the 1 minute. So as you can see, the price has been dropping. All right, so the initial trend of the day is bearish. Let's see how it goes. Okay, here we have the crossover. I accidentally skipped a little bit more than I like. So here I'd like to enter a long position because we've already swept the liquidity below this right here. I will set my stop loss below the recent low and my take profit above a recent high or the London high. I will choose the London high because it's a low-hanging fruit and it's a really high probability setup, this one. So let's see what happens. And there it is. So the price action was really choppy right here, but we've got our TP hit. So this is an example of how you can use the MA crossover in your strategy, but always remember to trade during the sessions, the London session or the New York session, especially on currencies or currency pairs that are based on these two geographical parts. For example, the euro is for the Europe, so the main session for European markets is the London session, and the US dollar is of course the New York session. So yeah, and this is how you can trade with the MA crossover. But I really suggest you that if you don't have enough experience reading the price action and reading the tape, basically, you can add other indicators, so you can trade with those. All right, so you can, for example, use an RSI or a MACD indicator to help you better understand what's going on the chart. And this is a topic for another video, another strategy video. I'm just right now trying to show you how moving averages and the MA crossover specifically works. Okay, so for binary options, I like another strategy. It's somehow different to this one because, of course, binary options are different. And for those of you who don't know how binary options trading work, it's basically you should select a time period. For example, I would say in the next 5 minutes. Let me drop to the 1 minute time frame. It will be easier to explain this. And let me hide the trading sessions. Okay. So for example, you want to trade a binary option right here. Okay. So, and you want, you believe that the price is still going to travel higher because it's, obviously above both moving averages, and it's near this one, and it should get supported right around here. So what you do is that for binary options trading, you should select an expiration time. And what I basically do is I will trade the 1 minute time frame, but I will focus on 5 minute expiries. All right. So what I mean by this period is that when this period is over and I've entered the trade, and after 5 minutes, if I've executed a call or a higher binary option, it's basically the same as a buy here. If the price is higher than my entry price at expiration, I will win the trade. And if it's not, I will lose it. So it doesn't matter how much higher. It could be this higher. It could be, at right around here. Okay? It could be a lot higher. It could be only 1 pip higher. It doesn't matter to you. Your profit will be fixed to a profit ratio, which is usually around 80%. So for example, you will risk $1, and if you win, you will get $1.80 out of it. And the $1 is your initial investment, and the 80 cents is, of course, your profit. And if you lose, you will lose the whole $1. So the risk reward ratio for binary options trading is always less than 1. Remember this, okay? So I won't bore you with more details. We already have a video on our channel that shows how binary options trading works. So let's move on with this strategy, for example. And what I basically do, I will use the same period 20 and 60 for the 1 minute time frame, but this time I will trade on the 1 minute. Okay, but my expiration time is always fixed to 5, and I will wait for another valid crossover. Okay, so let's put the trading sessions back on the chart. Here it is, and let's actually skip to the next day because I don't like to trade at the end of the in the afternoon of the New York time. So let's skip to the next day. Alright guys, here we are at the beginning of the London session of the next day, and we will again look for a valid crossover, either bullish or bearish. The price action is really bullish right now, so we should have a really great setup to enter a lower binary option trade. Okay, so let's wait and see. Alright, there we have it. This is our bearish crossover. One more candle, and yeah, there it is. Okay, so right now I'm going to enter a lower binary option trade. All right, and just remember that I will enter the trade. Okay, I will enter the trade right at the close of the candle confirming the crossover, or at the beginning. Basically it's the same, at the beginning of the next candle, or at the open of the next candle, or at the close of the last one. Okay, so let's say we executed here. Just note that this is TradingView and you can't trade binary options obviously right here, but I will select the sell button just for you to see where we have entered. And our expiration time is 5 minutes. Okay, 5-minute binary option. We're basically trading a 5-minute binary option right now. Okay, so right now is 4:13, and we will skip 5 candles to see if we end up in profit or loss. Okay, so after 5 candles, after 5 1-minute candles, basically it's obvious that the 5-minute binary option will expire because we've entered right here. Okay guys, here's the close of the last 1-minute candle, and our binary option trade expires right here. And as you can see, it's below our entry point. Okay, and this means that we have bagged the profit right here. This is a profitable binary option put strategy, or the lower binary option trade that is profitable. Okay, so yeah, I will cancel it, and as you can see, we've made a profit. Of course, the profit amount is different what shows here, because we're basically trading Forex and CFDs on TradingView. I'm not showing you how to do it on a binary options platform. They don't have the replay button, so you should wait a lot of time to create content actually. So this is why I'm showing you right here. Okay, but we have other videos on platforms like, for example, Pocket Option or Quotex, and that I've shown you how to trade on these platforms and how the binary options trading actually works. Okay, so yeah, this wraps it up. This wraps our video. And in this video, we've seen what a moving average is, what an exponential moving average is, and what is the moving average crossover indicator, and how you can use this moving average crossover for both trading Forex, CFDs, or even binary options. All right. And for those of you that are new to the channel, our channel is based on binary options trading, but we also teach general trading and analyze general trading strategies, so you can use the insights you get here on crypto, Forex, CFDs, stocks even, and of course binary options. So feel free to leave comments and tell me what you think about moving averages, and if there are profitable strategies based on them, and if they are even useful for you in your trading, in your experience, or not. And for those of you that want to learn more about binary options, I think you can use demo accounts on platforms like Pocket Option. So I will leave a link in the description. You can create an account and use their free demo account for practicing binary options trading. And yeah, that's it. So see you in the next one, and bye bye.